Yes, thank you for deciding to have 1 hour of your time with us to learn something new about real estate. It might not necessarily be very new, but I'm very sure you will learn something today. We are looking at real estate investment in Ghana, and just for you to know the areas we will cover, we will first give an overview of real estate and try as much as possible to apply the overview to Ghana. Then we give some investment considerations so that if you are thinking of investing in Ghana in real estate, these considerations will guide you. Then you also highlight on some financing methods or options in investing in real estate in Ghana. So these are the 3 key areas we will cover today before we take some questions and answer those questions. So the first one is an overview of real estate in Ghana. An overview of real estate in Ghana. And the question is, what is the overview of a real estate? What is the meaning of a real estate? In many a time when we talk about real estate, the temptation to think of a land, limiting it to land, is very high. But real estate is defined or can easily be explained as any immovable assets, that has the potentiality or the ability to generate income or appreciate in terms of its value. So real estate is an immovable income. So if you look at the qualities or the nature of a real estate, it's an immovable asset. It appreciates in terms of its value. It's tangible assets. So if you have an intangible asset like a goodwill, it cannot be classified under real estate. So real estate is a tangible asset. Then real estate has the ability to generate income to the owner. So generating income means you can generate passive income. Passive income means regular income, periodic income, or you can generate income as in selling the property to generate a massive income. So when you think about real estate, these are the 4 areas you need to consider. Is the item immovable? Has the item the ability to appreciate in value? Is it tangible? And can it generate passive or regular income? Then what are the types of real estate in Ghana? There may be various types of real estate in other places in the world, but to think about the real estate or the type of real estate in Ghana, the first one is residential real estate. Residential real estate, as you may know, building properties and renting for residential purposes. So residential real estate is one of the types of real estate we have in Ghana. Then we also have commercial real estate. In commercial real estate, we are talking about building offices, building stores for commercial purposes. When you go to the major markets in Ghana, Makola markets, Abobroshi, Kegetia, there are stores or shops for rentals. The investors in these properties are real estate investors, but we can say that they have invested in commercial real estate. Then we also have industrial real estate in Ghana. So industrial real estate in Ghana could be, investing in warehousing. Warehousing is a key area in Ghana. Have you ever thought about it? Where do the market women in the major market keep their goods? Some of them, they have their own shops, and some of them actually keep their goods in rented, spaces. The owners of those spaces are not using the space for commercial purposes, but they rent the space for a short time for market women to use the space to store their excess goods or even store their goods, and that can be categorized under industrial real estate. We also have real estate such as parks or recreational parks can also be classified under industrial real estate, and this is also another type of real estate. The most popular of all in Ghana is land investment. Land investment is a key type of real estate investment when you invest in land in Ghana, because a real estate definition talks about the immovable nature. because of the immovable nature of land. When you invest in land, beyond the land, or after some time, some people will also develop the space after your land, and the value of the land will increase. We'll go more into it as we make progress. So this is an overview of real estate in Ghana. We've given a description of what it is. We've given 4 key areas or 4 key types of real estate in Ghana: residential real estate, commercial real estate, industrial real estate, and land investments. If you take the residential real estate, if you are going into real estate, there are 2 types of real estate investors. You can either go into real estate as an active investor or as a passive investor. So as an active investor, you are really determined and very decisive about it, and you are putting your investment in real estate. And when it comes to that, you need to have market data, make research in the market to understand the market. We'll move to some of the sections and I'll highlight on this the more. But the point I want to make here is that if you're a passive real estate investor, you could invest in a real estate investment fund for the fund managers to manage the fund for you in Ghana, or you could buy a land or a property and just leave the land for capital appreciation. In that case, you don't need active research, you don't need to monitor many things because you are just a passive investor. Now, we want to look at some strengths and opportunities in the real estate investment in Ghana. And at this section, we want to highlight the reasons why people may go into real estate investment in Ghana. And one of the key reasons is growing demand. Because of the population growth in Ghana, the demand for any of these types of real estate in Ghana is growing every day. Residential real estate demand is increasing. Commercial real estate demand increases every day. Even industrial and land investment is increasing in demand due to the growing population, due to urbanization. So think about it, when in 10 years ago, that was 2014, places around Adenta in Ghana or in Accra, those places were very bushy, the price was not expensive. I remember in 2016, land in a place called Oibi was not very attractive. It was just about 10,000 cedis. And even with that, people had to almost beg or talk lots before people can buy those properties. But because of growing population, because of the increase in the population in Accra, all those places have been developed. There was a place I visited in 2020 and the price was 40,000 cedis in Community 25. Today, the same spot is over 250,000 Ghana cedis because of growth in demand. Many people are moving towards that direction. So growing demand for real estate investment, any of the types of real estate here, has increased the appetite for investors to look at real estate investment in Ghana. Then we have another factor known as protection against inflation. Real estate actually in Ghana does not increase in prices based on inflation. It doesn't have anything, no correlation. We've done a number of research and we've realized that the growth in the prices or the value of properties in Ghana has no direct relationship with inflation or CPI, that's the cumulative price index. No. We've realized that properties in Ghana can double in a month. Properties in Ghana can increase over a short time. Properties in Ghana can remain at a certain range over a long period of time. But what we've realized is that if properties are increasing, the growth in the value of those properties always outweigh or override the effect of inflation. Okay, so inflation in Ghana at the moment is about 22%, but the property, we sold the property at the beginning of the year, and today it has appreciated over 50%, just because they started the construction of the Dodowa Road, the dualization of the Dodowa Road, and the land that was sold for 35,000 today is 55,000, and some people can even sell it for 60,000 because of just one project on that route, just expanding the road, or the government has started the dualization process of the Adenta Dodowa Road, and that alone has increased the prices of land in that, but the prices of such properties have outweighed the price of inflation. So these points highlight the fact that it is possible to protect your investment against inflation by investing in real estate. Then, because there are different types of real estate, these four broad categories can also be broken down into various categories. Because of time, we don't want to go into theories, so we just want to leave it at these four types. But because there are other subcategories, there is an attractive factor of being a diverse investment opportunities. You can invest some of your investments in, let's say, commercial real estate. Even in residential real estate, you can invest about categories of real estate, and that makes it a very good investment in terms of diversification. Then it has potential high returns, and the returns are steady, the returns are fixed, the returns are certain. There is certainty in the returns you can receive from your real estate investment. Then another reason why people may invest in real estate is its tangibility. It's a tangible assets with increasing intrinsic value. The intrinsic value is the true value of the property. People see their properties and they feel happy. They find joy for seeing their investments. If you build a house, if you have apartments, if you have shops, you can go to the shops and you see it. And sometimes, especially in Ghana, the way we see those who have built houses, there's this kind of respect we accord them. And because of that, its tangibility is highly respected in Ghana. It can also give passive or active income. The passive income is the regular income you receive, and the active income is when you sell the property, you might generate an income that exceeds your expectation. There are so many tax incentives around having real estate in Ghana. Okay, the capital allowance, those in accounting, if you really want to apply the accounting system, you realize that there are certain allowances the government gives to those who own real estate in Ghana, and those tax or capital allowances reduces the actual tax you have to pay, unlike investment in, let's say, in bonds, investments in shares or equities in other areas of investment. The tax incentive in real estate is also in line with the government's expectation of increasing, let's say, affordable housing in Ghana. Government, does not have all the answers to residential issues in Ghana. So there are so many incentives in the tax law that can attract real estate investors into Ghana. Then the final point I want to raise here is a generational wealth builder. There are other forms of investment, but it is very easy to transfer an investment in real estate to your generation, to your children and to their children's children. And that is one of the reasons why people go into real estate in Ghana. You want to look at some weaknesses or some of the things that deter people from investing in real estate in Ghana. And one of the reasons is high cost of financing, especially the initial cost of investing in real estate. But there is not too much worry on this subject, because when we move to the next section, I will highlight some of the financing options that can help us to invest in real estate in Ghana. But the truth is, one threat or weakness to investing in real estate in Ghana is high cost of financing. Then there is also underdeveloped infrastructure. Unlike developed countries where land is valuable everywhere because of their infrastructure and their road network, in Ghana, buying a land is not enough. The accessibility of the land, the ability to live in that area and go to work in the city is really hindered because of the underdeveloped nature of our infrastructure. So that is a key factor or a key militating factor to the real estate growth in Ghana. Then another area is limited market data. Limited market data. And this is true because if you want the prices of property in specific areas, even though we have online marketing platforms like GG and other platforms to check the prices of those properties, but credible data from, let's say, the Ghana Statistical Services might not be available on their website, and it might not even be available when you visit those organizations for data, and that is really affecting real estate investment in Ghana. Then regulatory challenges, how to register your property, register your land. The processes are not very straight. The processes are very challenging, and because of that, many people are moving away from real estate in Ghana. We also have economic volatility, the impact of exchange rates affecting properties in Ghana. In some areas in Ghana, you can actually value your investment in foreign currencies, like having a property in East Legon or developed areas in Ghana. In those places, the economic volatility has little or no effect on real estate investment. But underdeveloped areas or developing areas in the city or outside the city can really be affected by economic volatility in Ghana. Then we also have environmental risks. We have the risk of flood, especially in Accra and some part of Ghana. When buying the property, sometimes you may not know the true nature of the land or the true nature of the environment. But during the rain season, we have seen several examples of people who appear to have regretted for purchasing properties that they didn't know the true nature of. And sometimes we hear places like, let's say, East Legon Hills, and many people move there to buy properties and develop their properties there. We have places like Apollonia, big places like that. There is also the risk that those places might exceed the demand for properties in those places could be overrated. So this point is saying that potential oversupply in prime areas, to a point that the property you invested more in will get to a time that the property will be depreciating in terms of the income generating ability. There are places in Accra that people have industrial real estate like offices, but those offices have not been rented because of oversupply. So when you move to other sections, I'll highlight some of the factors you need to consider before investing in real estate in Ghana. The last weakness or threat in Ghana is land tenures issues. Okay, so the best is to register, to buy a registered land or get a consultant like Media GH to contact them before you purchase any property, because they have professionals who are really much versed in land issues in Ghana. So these are some of the weaknesses and threats of real estate investment in Ghana, and I believe that once you take note of them, you'll be able to navigate your way through making the impact you want to make in the real estate space in Ghana. Let's quickly look at some factors to consider before investing in real estate in Ghana. Okay, these are points. I'll explain them as we move on. So the first one is the purpose of the investment. The purpose. Why are you investing in that kind of real estate? Are you investing as a passive investor, or you've heard that there is, in quotes, there is money in real estate? Okay, you can invest in real estate as an individual. You can invest in real estate as a business. They have tax implications. Okay, the tax rate for a real estate income or a rental from a property that is owned by a business is not the same as the tax rate of a rental from the same property but not owned by a company but owned by an individual. So the purpose of your investment should be well defined. Are you a business, a man investing in real estate as a business? Do you want to register your business before you buy the properties and register all the properties under the company, or you want to register all the properties under your name? So the purpose should be defined so that even the type of real estate under point 3 could be influenced by the purpose of investment. Okay, so if the purpose of investment is to create a business, I don't think you may invest in a passive land and may not develop it or work on it. So the purpose is important, and the type of real estate should also be considered. Look at the 4 types of real estate I highlighted in our previous slide: residential, commercial, industrial, or land investment, and make your choice or your decision based on the type of real estate you want to invest in. Then location or demand is very important. Location. Land is valuable in the long term, or in the long run. Land everywhere in Ghana is valuable, but today land everywhere in Ghana is not valuable. Okay, if you are an active investor, okay, because if you're an active investor, you are expecting returns, you are always monitoring, you want to see how your investment is appreciating in value. But if you don't take into consideration the location and the type of demand in that location, you may make mistake in investing in Ghana. I believe that, for example, if you want to go into commercial real estate, your focus should not be on the cost of the land. Your focus should be on the demand for the type of commercial real estate you want to build, because the land for commercial purpose may be far expensive or more expensive than the cost of a land for residential purpose. Okay, but because you've identified your purpose, you have identified the type of real estate you want to enter, that can influence your decision on the location. You might spend $30,000, $50,000 to buy a land in a location that can really serve the purpose of commercial real estate than to buy a 10,000 cedi or 20,000 cedi land that will not serve the purpose. Okay, even in residential real estate, the location matters, especially if you want to generate passive income from residential real estate. For example, buying a land that costs, let's say, 20,000, 10,000, 15,000, it means that it may take time before the place can be used for residential stroke commercial purpose. Even if you develop it for residential purpose, remember the income from the building or the property in that location might not match the income of a building in a location that the land may cost $400,000, $50,000, or 400,000 Ghana cedis. So location matters, and before the location, I want to encourage you to identify the purpose of the investment, the type of investment, and once you identify these two factors, the cost of the land should not matter. I've realized that in real estate in Ghana, the cost of the land should not be the main decision driver. The decision driver should be the purpose and the type of real estate. Okay, because, for example, if you buy a property that is, let's say, 100 kilometers away from Accra, when you build, the cost of building might be the same, irrespective of the location. The cost of developing a property in Ghana is on average the same everywhere. For example, if you are building in Accra, the cost of sand may be high. If you are building outside Accra, the cost of sand may not be high, but the cost of cement may be higher than the cost of cement in Accra, because the cost of cement will be bought in Accra and will be transported, or taken to the location outside Accra. So sometimes there is, let's say, 10 cedis, 5 cedis increase in transport. So there are certain materials you may get them outside Accra for cheap, or there are certain materials you may get them, but in the long run, the cost of building is the same. So the location should be the driving factor. Do you want to spend extra 300,000, 20,000, 50,000 on the land because afterwards you want to rent it out, 2-bedroom, 1-bedroom, and in the next 3 to 4 years you might get back the additional money you paid for the value of the land? Okay, so when you see the adverts on media's platform, some of the lands are expensive. You don't just go for the cheap ones or the lowly expensive ones. You just ask yourself, what do I need this property for? Irrespective of the price, I want the 80,000 one because it's at Ebri. What is the prospect of building in Ebri and getting people to rent, or even selling? What is the possibility of selling that land? I care less about the land that costs 40,000 if my purpose and my plan is to develop the property and sell or use it for rental purposes. The fourth factor you must consider is land ownership. And I've been following media. They've run a number of webinar on land ownership. You can just check on the website or the social media platform. I think one of the webinars was on land ownership. So land ownership is key, and you need to do your due diligence because it's an immovable property. When you pay the money, you can't take it away. So another person can come and meet the property and claim ownership. So you need to go through the proper processes and get your land title. If you buy a building, get the land title. The title of the land, or the holder of the land title, is the owner of the building. That is in Ghana. Is the owner of the building. So let's do our best to ensure that if we really want to invest in real estate in Ghana, land ownership is a very important aspect of the process. Then availability of cash or liquidity, because real estate is immovable. In business, liquidity means the ability to turn something into cash. Liquidity means cash. So if you are an active investor in real estate, you should be sure that you always have cash available, because the value of the property can increase. But if you are out of cash, okay, you can discount the value of your property. You can sell it at a cheaper amount, and that will erode all the value you have generated from the property. So availability of cash or liquidity is important if you are planning to invest in real estate. Okay, then the sixth point is the condition of the property. There was a time once my pastor's wife called me that she wanted to buy a property around Atomic Junction. Atomic Junction is a prime area in Accra because if you build a hostel, it's close to Legon, it's close to UPS, it's close to Wisconsin and some other universities around. So we had to check, and what I did was to check the age of the property. It was a land. To check the age of, because you're buying a property, if the ownership or the one selling the land has only 5 years remaining in terms of the contract between him and the original owner, it means that after 5 years we will lose the land. So the condition of real estate is key. The age of the real estate, the property, the age of the land is also very important when making a decision about real estate in Ghana. Then future development prospects. future development prospects. Before you invest in the land, you are investing in Shire Hills. What are the prospects? Okay, there are so many prospects. Chopoli, what are the prospects? There was a time they announced, let's say, airports around Chopoli, and that's increased the demand. It doesn't mean that Chopoli is, let's say, in the heart of Accra, but because of the prospects, okay, around Amasamai, when they announced the construction of a stadium, the stadium in Amasamai or around Amasamai, the value of Amasamai increased like a magic. Okay, so future development or prospect, that means that if you're an active real estate investor, you analyze the market. Okay, some years ago, or even just last year, many people were complaining about the traffic between Dodua and Adenta, and it went to Parliament, and that is a key information to believe that very soon the road between Adenta and Dodua will be dualized. Okay, so if somebody analyzed the market with that potential future development, the person may have purchased land around that area, and this year when they cut the sword, the development, when they started the project, I actually bought a property there some time ago, and I know the value today just because they started the dualization of that road. So you need to analyze the market and understand potential future development around the area and do your investments, in that area. The final point of consideration is the tax implication. Okay, the tax rates in Ghana are not the same. There is a standard corporate income tax of 25%. Even with that, there are different rates for different regions. So you can be very smart and monitor where you do your investment in terms of the tax benefits. You can register a company just for your real estate, because the tax for a real estate company is not the same as the tax for an individual real estate investor. So get a consultant, understand the tax implications before investing in that type of real estate. Before we give opportunities for people to ask questions, you want to spend some time on understanding financing options in Ghana. If you know that you have interest in real estate, you've analyzed the market, you've considered these factors on the screen, you've analyzed the markets, you know the weaknesses and the threats of real estate in Ghana, you've analyzed the market, you've seen the opportunities and the strengths in the market, but you do not have enough funds. What are the various options that you can consider? And one of the key options here is personal savings. Personal savings. Some people save money to, let's say, to buy a car. That's good, but that's not real estate. They save money to do so many things. But then if you are saving money or investing money with the idea of investing in real estate, I want to tell you that that is a very good step, because real estate financing could be very high, but if you are able to plan your investment in a way that you have some personal savings, you focus on real estate. I don't want to discourage people from investing in the money market or banks or, let's say, fund managers, but if there is an opportunity, there was a time I went to my HR and I asked her that how much of my provident fund can I withdraw? And everybody was looking at me as if I was broke and I was asking money for my provident fund. But the point was that I had seen a real estate opportunity. Instead of leaving my money with the fund managers, and I don't know how much they even put on the fund, if I have the rights or if I can withdraw the money from my pension fund, the provident fund, the tier 3, you can withdraw it if you're a professional. So if you withdraw and you get 50,000, when you invest that 50,000 in real estate, it's your personal saving. In fact, pension is savings. So if you withdraw that money, care less about what people may say. If you withdraw before 10 years in Ghana, for example, you will lose 15% of the amount. But I prefer to lose that 15% if I have a deal that can really generate more income. In the next 10 years, I can make more money from the withdrawal, the 85% of the amount I'm withdrawing, than to leave it with the fund managers. That is to a large extent. So personal savings is real. You can save your money and use it in real estate. Another one is personal loan. And one thing I've realized with many Ghanaians is that we are so much afraid of taking money from a bank or borrowing. When it comes to real estate, if you're an active investor and you do your analysis very well and you know the prospects of the area, you've analyzed the market based on some of the points I've highlighted, you can take a personal loan. If you're a professional, you can take a loan that will be paying with your salary and invest in real estate. You will not lose the real estate because it's an immovable asset. It can generate passive income for you. So the personal loan can be paid through your salary or through other sources of income, and you can increase the value of your investment in the real estate. Then we also have estate installment plan. Some real estate companies have installment plan. Sometimes they do add a percentage to the standard price. But if you look at it carefully, the percentage they add to the price might not be higher than the possibility of the asset appreciation. 2 years ago, land around Pokwase, I know the price. There was this real estate installment plan. I know somebody who took advantage of it, and I know another one who did not. He was saving money to buy it. He thought the interest of 20% on the cost price was too high. 2 years down the line, the price of land in Pokwase, those of you who are familiar with Pokwase, you know the price has doubled. Why? Just because of the Pokwase interchange, the largest interchange in Ghana. When they completed the project 2 years ago, the value of properties in Pokwase increased more than 100%. In fact, they might even tell you that there's no land in that area just because they want to increase the value. So the point here is that if there is an opportunity for estate installment plan, sometimes the company may not even have it. You can request for it, that if I pay in installment, how much will you add on the standard price? If you do your maths and it makes sense, I encourage you to go into it, because you don't know when the price of that property will double, because the prices of real estate in Ghana do not increase in line with the standard cost of living or the standard inflation we know. Then we also have partnership. You can go into partnership with somebody, with a friend, with your husband or wife, with somebody you trust. Then you invest your money in real estate, and that is also a key source of financing in Ghana. Partnership is similar to crowdfunding, but crowdfunding has its own differentiating factors. Partnership is 2 or 3 or more people investing into the real estate. But for crowdfunding, you invest into a fund that will be used to purchase the property. For example, you have 5 people in a company. You work to a real estate company like media and say that, okay, we want to buy 5 plots of land, but we want to make a down payment of 2 plots. 2 plots is not coming from 2 people. Your money was not enough to purchase one plot of land, but when you put your money together, we call it crowdfunding. When you put 5 people's little money together, that money can pay for 2 plots. Okay, you can either buy the 2 plots, and it's similar to the Indobua system in the farming communities. You put down the 2 plots, then you also save money again and buy another one. By the time you buy the third one, the two plots or the initial ones would have appreciated in value. Or you tell the company that you want to buy 5 plots and make a down payment of 2 plots. In the next 6 months, we'll pay the remaining one. Because you are a group, you are a crowd, it is very easy for the real estate company to align with your request. Okay, unlike you going as an individual and telling them that. And some of these things, they are not theories. What you are seeing on the screen, they are not theories. We've been applying them, or we've advised people to apply them. I've advised somebody to take a mortgage, personal loan, partnership, crowdfunding, and all these are practical sources of funds to invest in real estate in Ghana. Then we have the capital market, which is not very common in Ghana. Capital market means investing in bonds, investing in shares, like MTN, Stanchart, all these companies are listed on the Ghana Stock Exchange. You can also invest in foreign stock exchange. These days you can invest in bonds, you can buy Microsoft shares, Netflix shares, and when they declare dividend as a shareholder, you will also be having some money. And because you are investing in foreign currencies, if you are investing in foreign stocks, the returns when converted to the local currency can help you to purchase the real estate property you want to invest in. The final point on the screen is money market. Money market is short-term securities like treasury bills, fixed deposits within 1 year. Okay. And somebody may ask that, why are we adding money market to real estate? Sometimes you are saving money, especially the first point, saving money to buy a property. You know that in the next 3 months, you may not have enough money to buy within the 3 months, but by the end of the 3rd month, you have enough money to buy the property. It means that instead of keeping the 20,000 with you for 3 months, you can invest in treasury bill for 90 days and you get some coins, let's say 1,000 cedis more, before the actual investment takes place. So to conclude, we've looked at investing in real estate in Ghana, the types of real estate opportunities in Ghana, the weaknesses and the threats, or the things to consider before making the decision in Ghana. And we've also looked at the prospects, the strength, the opportunities in real estate in Ghana. And finally, we've considered the sources of funding for investors or those interested in real estate investment in Ghana. So thank you very much for giving me your audience. There are questions, I'm available to answer them. Thank you.
Right. Thank you so much. That was so enlightening. I would like everyone who has a question to please leave them in chat and I will be able to read them right away. So we'll wait 1-2 minutes. We still have 15 minutes till our session is over. So that's enough. That's a lot of time to read questions. Nana, you said you had a question on the personal loan and investment in real estate. If you would like to type that, that would be great. Thank you, everyone. Okay, right. Yay. Thank you, Adu. Thank you. Question 1 is, how do you personally ascertain the value of a property you want to purchase?
Okay. Yeah, so that's a very important question, and I was actually expecting that. So you want to personally ascertain the value of a property you want to purchase. The first one is you want to use what we call the market comparable. So market comparable is you go online, for example, and you type in the name of the property in online marketing platforms like Gigi, to say that I want to purchase a property in East Legon or Adenta. Okay, you give a description, Adenta 2-bedroom, for example. There will be several properties around that area, and you will see the prices of the properties there. Assuming the range of prices is between, say, 500,000 cedis to 600, 700,000 cedis, then it means that you have a fair idea about the value of properties in that particular area. So land in Adenta today is between 500,000 and let's say 600,000. Anything beyond that could be an overstatement, because if you pick 20 properties listed online, you could see that the price could be 450, 550, 500, most of them 450. So you can say that this is the range of prices I'm getting from online. Another way of ascertaining the value of the property is called the income approach. I will not take you into theories. The income approach is the perceived expected income you will generate from the property. Okay, so I think 2 or 3 years ago, we got a property at Medina Market, and we didn't get comparable companies to check what is the value of a shop in the market, because there were not many shops going for sale at that time. So what we did was that, okay, if you buy this shop, how much can I earn from the shop in a year? The rental income from the shop 2 years ago was 2,000 cedis. The one who bought the shop was actually renting for 1,500. By the time he was giving it out, it was 2,000 cedis. Then we did some assumption that, okay, if you increase the rent every 3 years, every 2 years, every 5 years, whatever the interval may be, if you increase it by 10%, what is your expected income for 10 years? What is my payback? So doing that analysis, when you compare that with, let's say, investing in bonds or buying another property somewhere else, what is the expected value? That can give you an idea of the value. It might not be theoretical, it might not be an actual specific value, but that can mean that if I know I'm getting 2,000 a month, so amount in 5 years, I can put value, can help you even before you approach a consultant. You know the value of your property by looking at similar properties in the location and how much they are going for, or the expected income from the property can help you to have an idea about the value.
Brilliant. That's brilliant. Thank you so much. Don't worry, everyone. We'll get to everyone's questions before we end the webinar. Okay, so thank you, Adu, for that. The next person is Albert. Albert, thank you. He says, do I need a license to sell a property I've seen on advertisement for commission?
No, you don't need a license to sell a property. You can sell a property, but if you are the owner of the property, you pay property income. If you don't pay and there is an issue, okay, you might find it difficult to win the issue with the courts. So it's very important to understand the tax implications of the property you are selling. But if you're an agent, you only pay taxes on your commission. So you sell a property and you make 1,000 cedis or $1,000 on it. You are, as a personal income tax, you only have to pay the personal income tax on the profit or on the commission. But you don't need a license before you sell properties in Ghana.
Right. Okay. Next question. Thank you so much. Daniel, thank you so much for answering that. Next question by Michael. He's asking, considering the group funding, are there somehow legalities that we must pay attention to? Like, for example, at some point, someone decides not to go on with the plan. What happens? So what happens if someone decides to drop out?
Okay, so yeah, it's a very good question or a good point. The issue is that the group funding, you go in together to enjoy the risks and also enjoy the rewards. And the real estate company will give the property to the group. So the group decides to enjoy whatever comes from that decision. And that's why before you do that, you need to do that with trusted people, trusted, I mean, somebody you can really trust to a large extent. But then whatever happens, you are ready to bear the risk. Sometimes they do sign agreements. Okay, you have a contract that binds everybody. So between the group and the real estate company, the risk is borne by the entire group. But within the group, they may have some structures to mitigate such risk. Okay, so within the group, there could be an agreement that, of course, before you start, everybody may pay some amount of money to start. So if you want to drop out because of maybe an internal arrangement among you, you can say that if you are dropping out, you lose 10% of whatever you have invested in, okay, so that it can prevent people from just backing up or leaving the group without, giving you prior notice. So it's important to have an internal arrangement that legally binds the members, but between the real estate company and the group, the risk is borne by the entire group. So that is the key factor you need to consider.
So you just need to do your due diligence on that one.
Yeah.
So thank you, Michael, for asking that question. Joseph is asking, what's your advice on investment in farmlands, please?
Okay, so I mentioned in the presentation that we have active investors and passive investors. For the active, that is more like what they do. So they are really concerned about the timing of the appreciation of the assets or the timing of the income they expect from the real estate. So if you expect the value of the property to appreciate over a short time, then farmlands may not be your choice, because the value of farmland is actually in the long term. If you buy farmland, you buy it at a cheaper amount. After some time, that farmland will be a land for settlement, and you get your income from there. So you bought a farmland around Odoa. Some years ago, it was a farmland, but today there is increasing in prices, and that can help you. So if someone bought a farmland 2 years ago and is expecting the farmland to yield an abnormal returns, that person may be disappointed. Okay, unless you are buying the farmland for a farming activity, that means that you may be benefiting from the land through the farming activities. But if you are buying a farmland and renting it to farmers, you might not earn much, or it may depend on the success of the farm yield. It may depend on so many factors, but the key benefit is in the long term. In 10 years time, the farmland will be a residential land and you get more money from it. So that is the response to that question. You can buy a farmland, but it depends on your investment goals. The timing of the expected return is very important.
Thank you so much. Joseph, I hope that was helpful for you and understandable for everyone else. So the final question for all of this. Adu says, I once heard that the value of a property is the monthly rental income over a period of 10 years. Any comments about this, please?
No, it's not over a period of 10 years. Not at all. Because if you buy a property, the property can exist for more than 10 years. It can exist for 50 years or 100 years. Okay? But you are just doing a sense check, a fair idea of how much you are willing to pay for the property. Okay? Beyond the 10 years, you will still get income. But if in your estimation, you can get back your return within 10 years, then it's a good investment, especially if the payback or the time of getting back the investment is your priority. Okay, but if you want the technical way of
Yes,
so if
we
you want
lost
the
you for a
technical
bit.
way of valuing the property, you use a specific period like the 10 years, and beyond the 10 years, okay, there is a scientific way of doing it. Okay, we call it the terminal value, which is more, finance inclined. The terminal value is you assume that after a certain period of years, like 10 years, the income will be increasing at a steady growth. Okay, so we call it the terminal growth rate. Maybe after 10 years, it might be increasing, or after 20 years, it might only be increasing at 5% or 10%. Then based on that rate, you'll be able to estimate the future value of, of the investment beyond the specific period. So beyond 10 years, okay, all the cash flows you get is similar to the last cash flow divided by the discount rate minus the growth rate. So the discount rate is assuming you are investing in a bond. What is the rate? Annual return from the bond could be, let's say, 20%. So if the annual return on investing in other sources of investment is, say, 20%, you can say that that is your discount rate. So the future value of the property beyond the 10 years is the 10th year income, or the 10th year expected income, divided by the discount rate minus the future growth rate, which is an assumed number, let's say 10%. Okay, then you discount it to present value. It's a bit scientific or finance inclined. You can check online to understand the terminal growth rate or the terminal value. So terminal value plus the specified period value, that is a 10 years or 5 years, whatever the specified period may be, the value you expect in the specified period plus the terminal value is the total value of the investment.
Thank you. Okay, so we'll just take two more questions and then we'll end it for today. Thank you guys. Thank you guys for being so interactive. You've been a wonderful audience so far. All right. So, Ray is saying, "Hey Daniel, I'm aware there's a Real Estate Agency Act 2020, Act 1047, and a Real Estate Agency Council (REAC) that require real estate agents to be licensed in Ghana. Are we to understand that the provision of the Act 1047 and REAC are not yet operational? Question mark.
Okay, so the provision of the act, I don't know if it's in operation or not, but then we will check later online to see its operationality. But for now, I don't know of its operationality in the system. The real estate agencies I deal with do not have the license, but let me take it after or offline and get more information about it.
Okay. All right. Thank you so much. So for the final question from TT, she thanks you for the info, and she wants to know, please, what do you think about investing in the lands in Nsawam and its environs right now? Final question for you, please.
Okay, so in Sawem, the point is that you look for potential developmental projects or social amenities that can increase the value of land in those areas. And one of the factors is accessibility to road network. Now, in Sawem is on the Kumasi Accra Road, and the dualization of the Kumasi Accra Road is in progress. So when that is done, or when they get past in Sawem, It means that moving from Nsawam to Accra will be easier than before, and suddenly the value will increase. I said earlier on that the value of land in Ghana has no formula. Today it can double, but it will never come down. So assuming they are done, now they are somewhere around Amasamai, the road is not very good. People are complaining about traffic, but after Amasamai, they move closer to Nsawam and they will get past Nsawam towards Kumasi. And before you realize, Nsawam becomes a hot area. And the point is that I didn't say this in the presentation. You need to analyze the market to be sure the value of land has not gotten to its maturity stage. At the maturity stage, it doesn't increase abnormally. Okay, so the land that costs 10,000 is not at its maturity. It can double to 20,000 when they finish the road. The land that is 30,000 can double, but the land that is at 500,000 may be at its maturity stage. It doesn't mean that it will not increase in value, but it may not double in a year. Okay, so look at the value of the land today. Look at the potential development around the area. You must see it before many people see it. Okay, so just look at it again. Do you think, based on the location of the land, after the dualization of Kumasi Accra Road, the value of the land will increase? So when you do your fair assessment or objective assessment of the location of the land, not just the Nsawam, it can be Nsawam but far from Nsawam, far from the main road, far from road network. Even after the main road is done, that land may not have value, okay, or may not double in value. So in conclusion, because of the road, I'm saying today that after the dualization of the road, that's Nsawam will be closer to Accra in terms of transportation, and that can increase the value of land in Nsawam.
Thank you so much. That was so insightful. I hope everyone had a great time here. Thank you all for joining us today. Thank you so much, Daniel, for sitting down with us for almost over an hour. We have everyone thanking you in chat. So, just a final thank you for everyone for the engagement throughout the session. We hope this webinar provided a lot of valuable insights into investing in real estate in Ghana. At Medea GH, we are dedicated to making property ownership accessible and transparent. So we do our best to help you navigate everything, again, from property and material acquisition, construction, architectural design, consultation, and cost estimation. We'd love to keep in touch with you, so make sure you follow us on all our social media platforms. We are Medea GH Limited, MEDEAGH Ltd, on all platforms. Instagram, Facebook, Twitter, YouTube, LinkedIn, and everywhere else in between soon. Please check out our website, www.medeagh.com, for more insights on what we do and what we can provide you. Thank you so much for joining us, and have a great evening.